All right, guys, let's hop into it. I was marking up the charts a little bit, but one thing I wanted to touch on, and at the moment, I forgot who asked me, but it was about liquidity. All right. So show of hands or check
That was
boxes.
me.
It was you, Kev?
Yeah, the DMG. Yep.
Okay, cool. So, um, what I want you guys to do first is tell me who knows about liquidity. Does anybody in here know about liquidity? What does it mean? What is it about? How to spot it? Anything whatsoever about liquidity?
I know a little bit.
Give
I'm
it to.
looking I'm looking for equal highs, equal lows. I'm looking for like a diagonal line where they're building up liquidity, where they'll go take it out. It's almost like a some people call it like a PMG in a strat world.
Okay.
Does that make sense?
It does make sense. Yes, it does.
Okay.
But I like this. I like this a lot. Anybody else? I'm going to touch on what you said, Lisa. But anybody else on what they think liquidity is all about?
Can you find it too with the trend line? Is that like the buildup of it too with a trend?
Absolutely, it is, and I'm gonna break that down to you guys so that you understand that a bit more. All right, but yes, the answer to that question is yes. And Lisa did mention the same thing about the trend lines. What she's looking for, but I'm going to dive into it so that you guys really understand it. But who else was going to say something about liquidity or what you guys think liquidity is? What do you think it's about? Does anybody want to take a crack?
We also can be the liquidity, right?
That's facts. That's
Yeah.
big time facts. We are, and I'm gonna explain to you guys why we are. But that's absolutely right.
Would it be the stop losses too?
Boom. So you guys, I might not even have to explain liquidity. It looks like you guys have gotten it, but that is a part of it, absolutely. And these are it's all surrounding the same thing, but it's how you look at it to determine where it is. That's where people have just a bit of a a little curve trying to learn that, right? You know what I mean? But you guys all know what it is. You've been stating it, right out the gate as we gotten into things. But I want to give a few more seconds to anybody else. Does anybody else want to touch on liquidity, what they think it's about, or how to spot it? All right, guys. So you guys can see pretty much what I put up here, right? Is that liquidity is basically where the money at. All right, where's the money? Okay. Whenever you're trying to identify liquidity, guys, you can look at these type of things right here in order to identify them, where liquidity might be. And again, the way we say liquidity and then we say, okay, it means money or where the money's at. But how are we incorporating it into our trading? Like when we're live trading, how are we supposed to look at this in order to make it mean something for us to either get in or not get into a trade, et cetera, et cetera. So the part that you guys want to understand about liquidity and where the money's at is this is a psychological concept, all right, of the market makers. They know that they're manipulating the market because they get to see all the orders, all right. And when you have that kind of power, guys, right, it's one thing, right? Okay, I know Kev bought 100 shares, right? I know Lisa bought 1,000, boom, 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 right? I can see those things, but how if I wanted to try to move the market in my direction, like having that information that I see that you guys are doing, right? If I wanted to be able to hedge you guys or go against you guys to try to capitalize off of this information that I see, how am I going to go about doing that? Well, I have to have enough money to put in a large order to go against the direction that I see you guys are placing your orders. So all of you guys are buying Euro USD and you putting big lot sizes on it, et cetera, et cetera. Not only do I see where you entered the trade, I also see where your stop loss is set to. I also see where your take profit is set to, et cetera, right? So I have all this information and I see everybody's buying the Euro USD. Well, how could I collect their money? Because if you're buying, your money is wherever your stop loss is. And this is why you guys will see, trade orders, right? So buy limit, sell limits, buy stop, sell stop, or just a stop loss in general. Those are all trading orders, all right? Where they are the areas, depending on which direction you're going in, you have some money that you're sitting, you're sitting on the table. It's just sitting there on the table. So it's almost like, again, if I'm that market maker and I'm trying to figure out how can I get that money that Lisa and Kev and everyone left on the table, how can I do that, right? Well, I have to get you to believe. So I'm like, hey, Lisa, hey, Kev, guys, there's $1 million for you in the other room. What y'all gonna do? Y'all gonna run over to that room and then I'm gonna collect. You're gonna see it ain't no $1 million over there, right? But I'm gonna take your money off the table because you guys are going now. And then I'm gonna flip that money right? I'm gonna flip it and then I'm gonna turn it into $2 million. So I'm gonna get $1 million for myself. But then that $1 million that I told you guys about, I'm gonna say, okay, guys, go back to that room and check again. The $1 million there now. You're like, oh, okay, shit. But where's the money that we had on this table, right? You understand what I'm saying? It's that kind of a dirty game. If you guys understand how I'm trying to explain that, right? You have these orders. They're where your money sits, and the bank just wants to find a way to go and get that money. They don't do it all the time, but they do it enough for you to be able to know when it might happen. And then that's how you plug it in to your trading. So you do all your market structure stuff, you see what you need to see, but then you start seeing these areas where there could be liquidity sitting behind it. So instead of putting your stop loss right where that liquidity sits, right, you'll put it someplace way higher, right? You understand what I'm saying? Because if I had $100 right behind me that I could take away from somebody, that's much easier than me having to go, 2 doors over to try to grab $100 from some person who's 2 doors over. Do you understand what I'm saying? So when you're able to see these buildups of where liquidity might sit, you can identify that and say, okay, once I get into this trade, I'm going to make sure that I put my stop loss higher, because there's a big chance that they'll have what we call a liquidity hunt. So they'll just go grab that money off the table and then they will go in your direction. Okay, guys? So this is the logic behind it. All right. So it's more than just knowing about liquidity, meaning money, or where the money's sitting or where the money's at. That's one thing. You know what it means. Now you need to know, how would you identify it? Okay. And then this is how you identify it, by these things that's listed here. And I'm going to, just draw them out so you guys can see. But then after you've been able to identify it, well, how do you play it, or how do you use it when you're getting ready to make a play? Well, you use it by knowing where to put your stop loss. Okay. Or maybe you don't even have to put your stop loss higher. What you can do is just be patient and wait for the hunt to happen. Again, sometimes it doesn't, so you might miss the trade. It is what it is. But you can wait for the stop hunt to happen where it takes out the liquidity, and then you can wait for that next candle, and then you can say, okay, now I can get in, and now you can get in with the tight stop loss because they've already taken the liquidity out. All right, guys, these are the things that will level you up. All right, guys, you will really start to see, damn, this is easy stuff. But when you don't know, you don't know. So everything seems so difficult and so hard, but it's not, guys. It's easy peasy lemon squeezy. Okay. So I'm going to show you guys how we can identify the liquidity with the trade orders, and then we'll go to the trend line, the market structure, and then the indicator. So let's just jump right into it. All right. So here we'll go with trading orders first. All right, JT, welcome. All right, guys. So we see this, boom, bam, boom, bam, and now we're starting to see some bulls come in, right? So watch me now. All right, we're talking about trade orders. All right, your sell stops, your buy stops, sell limits, your buy limits, those orders, even your market orders, right? The orders that when you just hit buy or sell, you're in right away at whatever price the pair, the currency happens to be at, the currency pair happens to be at. But with all of these orders, I'm going to show you how to identify where liquidity will sit. Okay, it's all just logical, right? You know what I mean? This isn't some kind of thing that we just kind of came up with or something like that. Like, every trader is using this logic to understand liquidity. Okay, guys, so follow me. All right, now we see price is rising, pulling back, rising, pulling back. All right, so if we read the structure, you guys know that's our low, that's our high, right? And then we have our higher low, right? And then we have our higher high because price broke this previous high. All right, and now we got that higher high, we pulled back, we came up a little bit, which created the next higher low. So we know for sure right now that we are in a uptrend, right? Easy peasy lemon squeezy. Now here's where the magic starts to happen. All right, we're going to get into this trade right here, and we're going to have our stop loss right below here, and we'll aim for 1 and 2, boom, bam, right? We're ready to rock and roll on this trade. But your stop loss is a order, okay? It is actually a sell stop order, right? The actual type of order, but we just normally go by and say stop loss, right? Because it's going to be difficult to explain a sell stop when you're actually in a buying trade. It just sounds better to understand it as a stop loss instead of a sell stop, because then you get to going, well, a sell stop is where I want to get into a price when it goes down, and then when it hits that number, then I want it to go down some more. So I don't understand that with the stop loss, or how does it gets confusing. That's what I'm trying to say. So don't worry about the actual type of order that you've placed in. just know that whatever it is, if it's a buy stop, if it's a sell stop, whatever order type that it is, that those numbers are where liquidity will sit behind. All right. And it's more with, again, where your stop loss happens to be in those given orders, right? And or how you place those orders. And we'll touch on it. You have to do the opposite of what you're in to get out. Exactly. Yes. So Kev understands it. But when you're explaining it from like a sell stop, but you bought the pair already, it confuses you, because it's really what I'm saying is I'm really saying stop loss, but because I say sell stop, then that throws you off. So what it really is that in a sell stop, how it works by default is it goes down to a price and then it executes another type of order, right? So a sell stop will have price fall down, get to this number, activate the order, right? And then get you into a sell, okay? Now, when you're trying to think, okay, well, if it hits my stop loss number, is it going to put me in for a sell? You see what I'm saying? So it makes it like, oh man, you're confusing me, man. I don't know what's what. So try not to, wrap your head around it too much, right? Just know that what we're getting at is that the orders, they mean something in regards to liquidity, where liquidity may sit. All right. So if you guys understand that, then you won't have to, be trying to figure out how the order types work and then boom, 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 because you'll just get sidetracked and you won't be able to focus on what you're trying to focus on is where's the liquidity. So so I can make sure I'm placing my stop loss at a decent distance away, or I can make sure that I wait until the liquidity hunt happens where it takes out the liquidity, and then I'll go ahead and get in for the trade. This is how we're trying to go about this in a live trade. Okay, so it's not easy for you guys to see the liquidity and stuff when you're just like, it's days like this, you're just marking up the charts and you're just trying to see. One moment, guys. Yeah, you just want to know that your orders are any type of order you put in is where liquidity can sit behind. You can either set a stop loss to be far away from where the liquidity hunt may happen, okay? Or again, just be patient, wait for it to happen, and then go ahead and get into the trade. So ultimately, guys, again, this is what I'm talking about on how this plays into your trading. So please understand that this is how we're using it. Again, it will be in conjunction with this and that and this and that, right? We call them confluences, but they're like, hey, what a coincidence. This is happening and that's happening, right? It's like, I don't know, it's a hot day and they're giving out free ice creams. What's the coincidence on that or whatever? But the more you get those, the more you can feel good about your trade. So being able to identify liquidity along with support and resistance, along with areas, where price will respect because of the market structure that you see, those things combined make your trades a lot more exciting because you know that they're on the higher probability side, right? You know what I'm saying? It's like, hey, I see a lot of alligators nowadays, but if I say, hey, Kev, man, put your hand in that alligator mouth as he holds it open, there's a 50% chance he, might not close his mouth. And then there's a 50% chance he will close his mouth. Right. And I say, I'll give you some money to take the challenge. How likely are you to go with those odds, right? A 50% chance, right? You might be like, nah, that's not going to work, Bain. So, you ain't going to take the challenge. You're not going to get into the trade, right? You're seeing that the percentage of things in your favor is not high enough for you to take the trade. So again, same scenario, say, hey, Kev, there's a 95% chance that this alligator will not close his mouth on you. And there's a 5% chance that he will. And here it is, I'll give you $1 million to take this challenge, right? Now you're going to be looking at that scenario a little bit differently. You might still be in fear. You understand what I'm saying to you? The emotions are still going to be there, right? But you might go ahead and take that. You know what I'm saying? And even if the alligator bites your arm off, you're like, man, I could pay for another arm, right? You know what I'm saying? It's just how it is, right? You tend to take the chance when you see that the probability is higher or in your favor. So again, when you guys see all these confluences on the chart, right? Oh, it's at a trend line. Oh, and it's at a support zone. Oh, and we got a bullish engulfing candle. Oh, and it already went and grabbed liquidity. Oh, boom, 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 boom. Like all these things just start lining up. The more you hear or are able to identify those things, the more likelihood you're probably going to win that trade. So again, a lot of traders that, professionals and things like this, guys, it's like Christmas, when we see these kind of things, guys, because we know how it's going to play out. The other reason why we know how it's going to play out is because we've seen it time and time again. This structure is the same old structure, guys. Higher, high, high, low, break, consolidate, lower, low, lower, high, consolidate, higher, high, high. Like it just constantly repeats itself. So it's not like every day you're trading something, so off than the previous day, right? It's all the same. It's just on different pairs and it happens at different times. And the setups, you just have to be at the chart or be able to get to the chart at the time of the setup being there, because sometimes you miss the setup. Sometimes, it takes a long time to get there, like all these other factors, guys. But at the end of the day, once you guys are able to see what you need to see, man, y'all gonna be like, I'm ready, right? You put more on it, and you think about all the other times that you saw that and how it played out, and it sticks in your brain. I'm telling you, it will absolutely be there for you guys to be like, I remember when it did this last time. I felt like I took this exact same trade. Oh, it did the exact same thing. Oh my God, it's just like deja vu all over again, guys. You will notice that there's a lot of times that you're trading and it feels like you're just taking the same trade over and over again, but you took it on a different pair, and you come back over and you say, damn, I took what? It was the same. Wait, am I tripping? Is it? You know what I'm saying? Like you know, it's how it is. And once you get to those levels of being able to identify that, guys, you just start taking the trades with way more confidence because everything is built there. Like Home and Living Color, Kev don't play that. Ain't playing with no alligator. I feel you, man. I feel you. Because again, this is, it's so funny again how a lot of real life stuff equates to the charts, guys. If Kev don't play that in that real life situation, then you don't play that on the charts. You understand what I'm saying? You're not gonna, like, if it's too risky, you ain't playing that. Like, that's not your game, right? But if you're saying, you know what, I like the odds of this. Once you guys get to that level again of saying, things like that, you guys are just gonna, you're gonna see a lot of improvement in your trading, and it's gonna feel good. All right. But here we go. So, again, let me just explain those orders again. You got stop losses that people will put behind this low. All right. They'll even put stop losses behind this low. All right. So here's a little thing that I've realized over time, right, is I'll see a perfect setup just like this, right? Let me just kind of, I'm gonna take this away for now. All right. But I'll see a perfect setup just like this. And I'm at the trend line, bull showed up, I'm at support. So, I take the trade, right? Or at least I want to take the trade. But then I evaluate the markup. And sometimes, like, this low is down here, but sometimes it's like really close. It's like this is a low, and then there's another low right underneath it. Guys, when you see that, like, you need to know that if you put your stop loss right behind here, there's a good chance that you're going to get hit, because it could do the hunt, because there's liquidity that will sit behind another low that's very close by, right? And then people have their stop loss behind there. So here it is. Yes, they can come in, like, take you out and then go up. But what they like to do is like, hey, there's $100 on that other table. It's just right across from us. Yeah, man, get that money. All right, boom, got it. All right, let's go. Let's get out of here. Boom. That's how it goes. You understand me? But it's something, again, that's, to me, something that you're going to be able to identify over time. Like, you guys just can't, I can say this to you, but until you see it on the chart, and then you see it a few times on the chart, it just won't click to you like that, right? You know what I'm saying? You can understand what I'm saying, right? But, like, making money from it is a whole nother, ball game with it, right? It's that you have to know how to incorporate it after you've learned it, right? There's a lot of us who, we went to take some tests, right? But when we actually got to whatever it is that we had to do, we didn't quite do it like how we thought we was going to do it, or we didn't really quite know how to do it, even though we passed the test. Do you understand what I'm saying? Like, that whole, you know, experience, the people who've been doing the actual work versus the ones who read about doing it, right? It's a whole, it's just two different worlds of people. So right now, you guys are the people who are reading about it. Okay, you're learning about it, you're getting all the information, but then you need to convert over to the people who do, right? Who do what this stuff is saying. You look for the charts. I mean, you mark up the charts and you look for these areas of liquidity, and you back test by making sure your stop loss is way below it, or waiting until you see the move is over with, right? The hunt is done, and then you get in. When you start seeing that and practicing that for a little bit, game over. All right, that's all I can really tell you. All right, but here it is. I see this sometimes. I want to get in for a buy, and I see this low is very near it. So even though I want to set my stop loss right here, a lot of times I'll set my stop loss right here, because I know how it is sometimes. I see it too many times, right? And especially, like, if it's a trade that has like I said, really nice setup, you know that it's going to go in your favor, but you don't know when it's going to do it. Do you understand what I'm saying? And you don't know how it's going to do it, right? Timing is everything. Sometimes you'll get the bulls to show up, and then this thing will just take off to the moon. It won't even make no pullback. It'll just keep rising and rising and rising, right? Other times, it'll do this. It'll look like it's ready to go, but then it comes, takes out the liquidity from here behind these stops, right behind this high, take out all the stops, grabbing the liquidity, and then it says again, hey, it's just a little more money right here. So it comes down, spikes right to the T of where that last candle was over there, and then shoots up and start going up. So I knew that this was going to happen, right? But if my stop loss was here or possibly in the zone, I would have got stopped out of the trade, and then it would have went in my direction. How many times have you guys noticed just in your own trading, that you get into a buy, you lose the trade, but you were right on the direction, right? It's so, go ahead. Somebody want to say something? Right.
I've gotten into a trade like that where I believe the long-term direction as a swing, and that very thing happened, and I second guessed myself just because of that right there.
There you go. And you're not alone. Everybody's doing this, right? They may not want to confess to it, while they're with the preacher today, okay? But they are absolutely having this same like affliction, and it's normal, like it's hella normal, but it's just, again, it fades. It becomes less and less of an issue the more you guys trade, because you see it time and time again. So you're able to, it's like your spider senses start going off. And you say, oh, I've seen this setup before. And last time you guys got me. You took me out and then you went in my direction. I knew you guys were going to do that, but somehow I let you guys get me. Not this time. Not this time. Y'all not going to get me. I'm ready. I'm ready for you guys. So I know last time you guys went right down to my stop loss. So you know what I'm going to do? I'm going to put my stop loss way down here. See if you guys want to come and get me. Right? At that point, it's like you're playing a game with the market, right? And it's fun. But it's fun because you have leveled up. You've gotten the education, you've gotten the experience, and now you're able to say, fool me once, shame on you, right? Fool me twice. Can't get fooled no more, right? It's just how it goes, guys. So just one of those things that, again, I know for a fact you guys will sharpen over time, but I just want to explain it so that you guys can start to look for it and start to see how the market gets manipulated, right? In that sense, so that you can avoid the manipulation and take advantage of the manipulation, right? It's a win-win, but you have to, you got to show up, all right? You just got to show up, all right? So that is where liquidity would be behind trade orders. Does anybody have any questions about what we just covered with liquidity being in the area of certain trading orders? All right. So we're going on to trend lines, guys. Well, here it is. Same exact example. We can use it. Just going to clean this up a little bit. All right, there we go. Right. So again, we're in a buy and price is at our trend line. Right. So now the bulls may not have shown up at this point, right? How they have right here, right? The bulls showed up, we pushed up, and now we're out of the zone, and we're up here. So the bulls may have not done that just yet. And maybe we're just right here at the trend line. There's a lot of people, a lot of traders that do not wait for confirmation. Okay, confirmation would be seeing that the bulls have shown up from this zone and from this trend line. But because certain people know from experience, okay, that a lot of times when price comes to a particular trend line, it's been, that trend line has been established for a reason, because previously price got to that trend line and it respected it and went up. The time before that, it respected the trend line and it went up. So again, experience tells you that now that it's at the trend line, we could pretty much expect it to go up. All right. So anybody buying, they would not be buying like I would be buying from up here with my confirmation. They would be buying down here. Right. So what's the difference with what you see between their order? I'm sorry, my order and their order. Well, it's pretty obvious. They're getting in at a lower price versus me getting in at a higher price. If you're buying something, you want to buy it when the price is low. Jordan's on discount. Oh, okay, man. Well, let me go and cop a few thousand pair, right? Versus when things are expensive. Okay, when price is higher. Oh, Jordan's done doubled the cost. Yeah. I think I'm good. I don't like Jordans no more. Right? That's how it goes. Okay, it's always best to get in from the lower price. So there's a catch 22, right? Or not a catch 22, but there's a risk to doing this, right? And that risk is you face more of a chance of getting your stop loss hit with this, with this actually being a reversal to, price starting to go into a downtrend, right? And you didn't wait for confirmation. So again, there's no telling that this down move is over with. So yes, you got in earlier at a better price, but at a more riskier of a trade. You understand me? And this is why you guys need to trade so you can figure out who you are, right? Are you the person who loves taking more risk because you've realized that you have gained more reward? Because by the time price gets up to my entry price, this person would have already made money, right? Maybe the money that I'm trying to make. And then here it is, with me, I got in later. So as price has been rising up and they've been making money, price could begin to pull back on me. But it's just, guys, you got to figure out, who you are, right? You might be more risky, you might be less risky. You just don't know until you get jiggy, right? You gotta figure it out. But here it is. They got in at an earlier time than me, and because they bought right here, you guys guessed it, their stop losses will be right behind here, here, potentially behind here, or even here. So when you know that, all right, then you know that price could come up like this and make you believe that it's ready to go. Okay. and then it comes back and takes everybody out, and then it goes. And it's just like, you be wanting to fight the chart. I promise you, because you think they playing with you. They take it against you for a few seconds, and then they give it, they put it in your direction. You know what I'm saying? Just man, I can think of so many scenarios with taking away something and then giving it back, and I'm sure you guys can too. But just think about it that way, because it happens that way, and you see it more the more you trade. All right, so that's where liquidity would sit with trend lines, guys, right behind the trend lines. Okay, and then again, you can still take into consideration market structure, right? Because market structure is still what we have here with, price coming to this support zone, right? And then bouncing from it. So again, you could take this into consideration where liquidity is sitting behind. So instead of just, buying from right here, again, you can wait to see if it dips a little below the trend line, but really it'll be after. So let me take that back. So you'll wait for it to come up, right? You'll wait for that to happen first, and then, all right, you'll see if it wants to go and grab any liquidity, because once it's made that higher low, that's where people know to go and start placing their stop losses behind. You understand me? So as you see the bulls come up, you guys hear me tell you all the time, okay, now it's time to buy, right? The bulls have shown up, so we're going to buy. But now we always make sure that we're at the previous swing, right, for our stop loss. And that's the thing that, again, sometimes we do and sometimes we don't. Sometimes we try to get away with this. And because we know that, hey, if we get away with this, this is great risk to reward, boom, 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 et cetera, et cetera. And that this would have been good for us, right? But then also, if we lose it, we don't lose a whole lot, right? So we just lost our little 15, 20 pips, and then it grabs liquidity, and now it comes back in our favor. Well, now we get back in, and now we've made our 20 pips that we lost with having a tight stop loss, and then we made about another 40 to 60 pips more. This is what happens, guys, when you have the experience and you understand how things could play out, right? The other scenario, of course, is that as we rose up here, not only did it come to take out this liquidity that sat right behind this higher low, but it said, hey, let's just go ahead and grab the other money that's sitting behind that other higher low because it's not too far away. So, all right, cool. Boom, let's get it. All right, we're out, and we're going back in the direction that we wanted to go in. But guess what? Another buying opportunity, right? So you're seeing the liquidity grab. You don't know it, but you just see what you're looking at is prices now in your support zone. So you're going to be looking for buying opportunities. Eventually, guys, I promise you, every little piece will start coming together, and you guys will be like, what? You won't believe it, right? It's like you were putting some Lego blocks together, and you do it, 5 times. Now, you're making Spider-Man Lego blocks and Statue of Liberty, right? You just get crazy with it because you know how to manipulate, the concepts, and you know how to look for them to come together. Be patient, sit on your hands, set your alerts, get there, ready, rock and roll, right? That's what it is. All right, so let me see if I can clean some of this stuff up, and then we will see. All right. So market structure, again, same exact example I can use here, right? Is the market structure is right in front of your face, and it usually always is, especially on the higher time frame. All right, so let's go. There it is, guys. Market structure. Okay, so without this, even without this, even without this, all right, this is what you guys will see on the chart. This looks like how the chart looks right now, right? And this is how I would trade it. I don't have many indicators on it, right? I just got, the candles going, right? And this is before I mark any support or resistance. But you guys can clearly see, let me see. Right, so it's not that. But you guys can clearly see where you're looking at this, and you can already visualize to a degree where your support and resistance levels might be, right? It's just what it is. So a lot of times, people don't even have to mark up the chart. Like, I do, I try to put it all nice and neat and clean for the way that I like to see it. But a lot of times I don't have to do that, right? I can see, okay, I'm just looking left. I see that's the other V shape. And now we're at that same area. I can start to, make my assumptions on, what I think price is going to do. But regardless, here we are, right? We're just looking at price going up, pulling back, going up higher, pulling back, and then going up with, every low point getting higher, okay? And every high point getting higher. So guys, right with that alone is your market structure. So liquidity is always going to sit behind your swings, okay? That's just the name of the game. Because why? Let me tell you why, right? Because you will mark this as one of your zones. All right, and again, you would have one here. Okay, you have one there, and you have one up here and one down there. But because you have your zones, right, at these swings, okay, of market structure, you can see if you were selling, where's your stop loss going to be? Okay. If you were buying, where's your stop loss going to be? Over and over and over. It gets up here. There's a level. Where would your stop losses be? Right above it. So this is why, guys, liquidity sits behind the swings. Okay. But you guys are all noticing from every example, from the order, right, the type of orders, to the trend line, and now to with market structure, it's all about the swings, guys. You know what I'm saying? Like, it's really just being able to identify where might traders buy or sell from, and of course where their pending orders may be. Again, these could be buy stops and sell stops. They could be buy limits and sell limits, but majority of the time we're just considering them stop losses. Okay, so just know, like, let me give you guys an example. So here, right, here's a sell stop. So they want to get in at this price, but then after they get in, they expect price to go down, right, to whatever price. Okay, so this order right here is to get them in. Okay, it's to get them in the trade. So if they get in the trade here, where would their stop loss most likely be? Again, price would have had to come down and break support, right? Come down, activate them. Okay, so if it broke support and they got activated right here, where's their stop loss most likely going to be? Especially with us knowing that this was support, it's going to be right behind support, right? This is the safer place, and guess what that place happens to be? The previous swing high. Right? So this is the highest price we get to before it begins to fall, which you want it to do because you got into a sell stop. Sell stop is you want price, you want to get entered at a lower price, and then after you get in it, you believe that it's going to keep falling from there. So guys, yes, your stop loss would have been behind this resistance area now, but it should be behind this swing high because it's easy for price to activate your order, come back, pull back like it's supposed to do because it's you know, every time it breaks, it's like a magnet, it wants to pull back. But as it's pulling back, it sees you got that money sitting on the table, says, you know what? Thank you, Kev. All right, we'll take the trade in your order now. I mean, in your favor now. And you'd be like, man, you dirty bastards. And then you look at it and you say, damn, I should have put my stop loss up here. I would have been good. Absolutely. But you have to go through those experiences at least 2 to 3 times to realize it and to, again, never get played again. You know, you get fooled, you know, here and there, but pretty soon you tighten up because you realize you could have won, like the trade went in your favor big time. So you realize you missed out on a whole lot of money just because your stop loss wasn't quite where it should have been, right? So you start remembering that, and that just, you know, it just gets you guys to another level with it. Okay. So then there's your market structure. All right, guys. And then last but not least, indicators. Okay. So it's not a lot of times that, you know, you'll use things like MACD and the RSI and stuff like that to kind of determine liquidity. It's more so when you have like a moving average on, okay, because what happens more often than not, right? So I got my 50-period moving average on, and you guys can see that like right about here, okay? So this area right here, all right? This is a bit of consolidation in the area, right? But then look where that moving average happens to be, right? So when we're looking at it, we know that, you know, people are going to sell. They probably got some sell stops behind here, but then you could also just kind of say, okay, well, here's the swing of that moving average, so I can also put my stop loss behind there. And guess what? It didn't even get past, you know, this level, right? So you're making money, making money, making money. But let's just say it wanted to do one more little whoop, thank you, then take it on down. Well, then you're out of it. And this is just one of those things, guys, that once you start to see structure, you'll be able to say, okay, maybe I should have put it here, or, you know, maybe I should have put it above the moving average because, you know, it was over there as a swing or whatever, right? It just starts coming to you more and more because you're thinking about, if the market is going to play a little dirty game, how are they going to play it, right? Oh, I remember they told me to go in the other room before, and when I went in there, the money wasn't in there. But when I came back, they took my money, and then I went into the room, and then the other money was there. So it's just like, you know how it goes, and you look for that same kind of thing. So, you know, the next person tells you, hey, go in that room over there. Nah, hell, I ain't falling for that. Nah, you got me before. You took my money. You're not gonna do that this time. Matter of fact, I'm gonna go and put my money far away so you can't grab it. Oh, here we go, guys. Market's open. All right. Gonna go ahead and let me see. Okay, so I got this marked up, but yeah, guys, any questions? Liquidity.
Can we talk about whether dollar is now?
Absolutely. And I think I said I was going to answer something for somebody, but I forgot who it was, and I'm hoping I answered it. So if you remember who I was talking to, please let me know if I covered what you needed. All right, so the dollar might be rising because its USD JPY pair says that it is rising. But let's hop up out of here, and we'll go to, oh, this is the dollar. Wait, is it? Yeah. All right, yeah, this is the dollar. All right, so it's definitely rising because all the other pairs are saying, well, I'm just saying that it should be rising because all these correlated pairs are matching it rising. So saying sell the R dollar now, and then buy the USD JPY. So let's just look. Oh man, look at that. This is the euro. So it gapped down right out the gate. All right, and guess what? No coincidence, guys. I swear, guys, this stuff just gets comical after a little bit, right? Yes, you go through some pain and suffering and whatnot. Just with what I call a learning curve. But right after that, guys, it's just like it really does feel like you're telling it what to do, but you're not. Anyways, this was a sell order block, all right, and then you could see the momentum loss in the candles, right? Big candle gets up to here. We get our sell order block. The bears come in, and then our price is starting to push down. So what we would love to see was just like one more little touch, and then the bears come in, then we would have sold it. But right away, you can see you got pushed down, broke these lows, pull back just a little bit, and now boom, open big time, or at least gapping down big time to the downside on the market open. But a lot of manipulation happens at this time. So as much as things, my alerts go off, I'm not trigger happy, right? You know what I'm saying? I still give it about an hour or two to like kind of settle itself. And then I'll come back and take a look and see if it was really, heading in that direction that it kind of seemed like it gapped into initially. All right. But, oh man. So this fell. And I'm assuming every other pair like that fell. So pound dollar. Yep, it fell. All dollar. Yep, it fell. But look, notice how they were all coming from areas of resistance or sell, order blocks or sell gaps, right? Sell gap, drop, right? Order block and out, drop, right? So it's just like, these things are expected. Like I should have made a killing on gold last week because I saw the buildup. If you guys look at like in the beginning, I want to say it was when news hit. So when it was when news hit, but I forgot which news. But I think it was like at the end of the week because it was like right here. And I think it was at resistance right here. And then I saw the buildup and then we got a drop. So I was just like, why didn't I have my order ready and take advantage of it? But I didn't. And I was sad. But that's how it goes, guys. You get busy sometimes and, you miss those, movie type trades. And, you can't, cry about it for too long. Right. But you gotta just go and look for the next opportunity because it comes. Yeah, you still say there you go. And I think it's still gold is going to drop even more. It's already, broke that uptrend structure. We've made these huge moves down, and now we've already breaking, this higher low over here, and we've broken this higher low right here. So definitely gold is going to continue falling. So awesome, holding on to that right now because I still think it's going to pay out. Don't get me wrong. There is there's a gap, right? There's a sell gap right here, and it may want to kind of pull back and test it, so it might rise up a little bit before doing that fall, but it's definitely going to fall.
Yeah, I was thinking about taking some partials and pushing my stop loss all the way up there just in case they do that.
Absolutely, you better do that. You
Let it ride.
That's right. That's absolutely right. Just you don't want to regret not doing that. You know what I'm saying? Like it hurts. Especially like if it goes against you and then it goes in your favor again. It's like, damn, I could have locked in those profits, and then when it went against me, I could have got in again from a higher price. Right? You guys just always have to be thinking about how to quickly switch up, on your bias with certain things with how the trade is moving, because that's the other part that makes you guys your skills, level up more. All right. But the dollar, again, like I've noticed around 7:45, maybe 8 o'clock is when I can kind of see the dollar doing something. But right now it's froze. It hasn't, I don't see the timer. It's not on and it's not moving. But the pairs that it's related to are jumping out to the downside. Now, again, I told you guys right out the gate, don't be so, quick to get in because look, 12, 11 pip spread, all dollar. Euro dollar, 15 pip spread. All right. And I always can see it when I look at this red line right here and the blue line right here. It's so far apart. Here we go on the pound dollar again, 15 pip spread. New Zealand dollar, 9 pip spread. All right. And you can see the lines are just a little bit closer, but nonetheless, you don't want to get in a standard lot and you're already down $900 right out the gate. All right. Pound odd has 12 pip spread. Pound CAD, 12 pips. Pound Swiss franc, 12 pips. 12 pips, 12. Dollar CAD, 13. USD CHF, 4. And USD JPY, 13. So you see, guys, this is, again, a dirty game, right? You guys see how they push it up, right? And they open the spread. So somebody looking at this right now, they're saying to themselves, oh, man, the USD JPY is going up, right? But then they just spike it. So you really get in, right? You get in with a 13 pip loss, you know, or you're down 13 pips right out the gate, right? And you get in with a loss that you're seeing in your account that you're down rather, and then they do this. So they push up, right? They get you to buy, okay? But remember, you're already negative when you get in the trade because of the spread, all right? So all they do, guys, is push it down just a little more, right? At least maybe getting below these lows or just tapping right back into like the gap that they may have created, right? So they'll push it down a little bit more, but remember, you're already down 13 pips. So as they're pushing it down more, you're down way more than you should have been, okay? So you may have your stop loss right here, but you get knocked out of the trade right here. This is why you don't want to have, or why you don't want to enter when you see a big spread like this. Because guess what? What would they do, right? So there's that gap. They go and touch on in that gap, grab the liquidity, maybe push it right back to where the gap is, and then go up. Well, we've been looking at this and we've been knowing, okay, yeah, the USD JPY is going to go up. But here it is, right? Look at how you already getting a wick on it, right? It's crazy, but you just never really know how it's going to go. But look, there's a little something right there. So maybe they could be doing that. Maybe they could be pushing to kind of take out this liquidity and then bring that bad boy all the way back down like this. So guys, you know, right out the gate when the market opens, you can trade, but you don't have to trade. And I recommend, you know, if you can help it, right? And what I mean by help it is that, you know, you see a really good setup and you don't want to miss it, right? So if you can help not, you know, or missing it, then, you know, okay, right? You're okay. But if you can't help but to take that trade because the setup looks really good, I'm not going to be mad at you because, again, I've seen things happen on the days that people believe it's not supposed to happen on, Sundays and Fridays. I've seen price go 300 pips on a Friday afternoon. I've seen it, right? You know what I'm saying? I've also seen, you know, things happen on that Sunday evening, right? 150 pips on USD JPY. And you're just like, damn, I could have made 1,500, you know, in the first few hours of the market opening, and I could have been done for the week. You know what I'm saying? It's so, it's like you can't really call it sometimes. You just got to take your chances, right? And again, you know, I know that's really all I can say, guys, is you just can't be scared to, you know, get into certain things, especially if you know it looks good, right? You know what I'm saying? It's a difference when it looks finicky, right? And again, I told you guys, if you're having a hard time, it looks like this, but then it looks like this, and you know, you got to do like that. Leave it alone. Just come back to it when it looks better, right? When it looks more clear, and you can make a bias. You know, you can put a bias on it. But if you're having to try to figure it out, yeah, chances are you're gonna be disappointed because you get in and you knew that it could have went the other way, and then it goes the other way, right? And it sucks. All right. But yeah, Lisa, the dollar looks like it will rise, or at least jump up, you know, have a gap up when it starts to go. And gold, Julie, I think it was, oh no, was it Sophia? Oh yeah, Sophia. Yeah, gold looks like it's still gonna go. So do what you got to do to lock in your money, and then just take your take profit off. Don't even have a take profit. To be honest with you, just let it ride for the rest of the week. It may not hit neither one of the stop losses that you had adjusted, and that's what we call the Bain train. And you'll be in it probably all week as it's falling. It's like, man, I can't believe it. It happens. Okay, it happens. So, any other questions, guys? Does everybody understand liquidity now? Give me a yes in the chat box if you guys understand liquidity now. How to look for it, how to identify it, how not to get manipulated by it. Or if you have any questions, let me know, and we will touch on it. All right, sweet deal. Love to see that. All right, guys. So if there's nothing else, we're gonna finish for today. Again, this should be finished recording pretty quickly, so I'll probably be able to get this to you guys a little later this evening, so you guys can grab whatever notes you need. And again, most importantly, get to the charts and have your replay to where you're testing out some of the stuff that you see, because you will see, right, examples all the time. And here's one to a degree, all right, where okay, it didn't quite reach, but this will be the area here. Okay, and then you see that, you know, price went up if you bought from here, so price comes right back to here, right? And you're wanting to buy it, but it just spikes down just enough, right, to go and grab some liquidity that's set right within this area before rising up. All right, but sometimes, again, you'll see it a lot more clearly, you know, once you have your market structure marked up, and you know, you can see price just getting right below, your previous structure and then going in your favor. Again, I'm sure you guys are going to spot it more now, especially with the lesson from today. But the way that you want to spot it is with having the experience, right? It's not just, being able to spot it here and there. Like, you want to make sure that you're marking up things and you're putting little things on your chart. Oh, liquidity is here, right? Whatever you want to put, smiley faces, I don't know, right? It's up to you what you want to do, but just something to help you identify these are areas where liquidity may sit behind. And after that, it's you're just going to know, okay, yeah, I want to try to trick me to get me to think you're going to go down by taking my money, right? That's just at my stop loss. But you guys are going to do that little hunt, and then you guys are going to go in my favor. So either I'm going to chill, or I'm going to have a very deep stop loss so you guys can't come get me in my money, right? And that's how it's going to be. But all right, guys, stay tuned. I'm gonna post my weekly watch list in a moment, so you guys can have that and see what I'm looking at for the week. For all my people who are going to be participating in the funded challenge with me this week, starting tomorrow, you guys will have the email of our session. And again, it's going to be at 5 a.m. in the morning to 6 a.m. Again, I'm going to try not to take up, the full hour, but again, it just depends on what the market is giving us. But be prepared to at least, be in the session for, about an hour. But I'll send you guys all that information this evening, and then tomorrow morning we should be ready to rock and roll. There's a lot of good setups, guys. So I think we're going to hit that target mark sooner than later. Probably within a few days is my prediction, but we'll see. But other than that, guys, hope you guys enjoy your evening with the family, and I will see you guys tomorrow. All right, peace. Want to get money? Want to get paid? Master Forex, like a sensei? Then you know you got to come and swing my way. And if you want to fast forward, hit replay.